the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Monday night, Charles Tarbey, Chairman of Century 21, joins us. And Charles, you'd have to say real estate is at the centre of this election campaign, and even more so after the launch by the Liberals yesterday with this idea that they're going to let first home buyers buy properties with just 5% deposit.
I think it's actually quite incredible, but elections are a wonderful thing for everybody, Steve, and it looks like they're going to be a little bit more wonderful for the real estate industry. And I think the first home buyers have deserved a break for a long time. And talk about timing, they're going to get a great opportunity to buy a property in the declining price market that we've had. So they're going to get even a better opportunity now. I don't know how they're going to do it, though. There was discussion today as to how they're going to give it away, in the sense because there's 10,000 potential loans and there's 100,000 potential first-home buyers.
It's short on a lot of detail, there's no doubt about that. It seems to me that it's a bit of a policy on the run. Labor immediately backed it, so that worries me for a start. But let's just walk through that. I mean, look, I'm pleased for real estate, people in the real estate business. Yes, it's going to generate property, and I know, and we're going to talk later in the program tonight to the Master Builders Association. They're happy because it's going to mean a lot more houses are going to get built. But are you worried, because you've always been very clear that you would like to see people who enter into a mortgage to buy a property that they have at least 20%. Should it really be the place of the government to be putting yours and my taxpayers' money into someone's deposit?
Yeah, at risk. Look, again, this is the wonderful part about elections. Everybody gets a giveaway in many cases. I am concerned about that. If I go back into the early 70s and early 80s, when money was a lot easier to get, albeit at a much more expensive rate, and 100% loans, they didn't call them that, but you can get a first mortgage, second mortgage, it was always a concern. And I do worry that if interest rates climb, not that there's any talk of that at the moment, but it will happen. And when it does, if people are geared up too highly and they don't have that equity in their business, if they need extra cash, they're not going to be able to borrow it.
It sort of smacks a little bit of what happened in the United States, though, doesn't it, Charles, with Fannie Mae and Fannie Mac, that, you know, they had a whole lot of people who were over-geared, and when you got a downturn like the global financial crunch, you had a whole bunch of people whose houses were worth less than what they owed on the property. In the US, you could just walk away and leave the keys in the door. You can't do that here.
That's correct. You could take the PC items, you could take the window frames, the doors, and walk away, and you weren't getting chased. And I think you and I spoke about how bad this got, even right down to a Mexican fruit picker who was on $14,000 a year, but was able to borrow in excess of over $800,000 to buy 2 investment properties. That's how ridiculous it got. Now, fortunately for us in Australia, the way we lend money has been tough, and it certainly has been in the last few months, but the way in which we do it is just not so freely done. And luckily, again, people are forced, in a sense, not to get into the marketplace in the first instance, and that way they're protected. But there is an issue there. If you get too free with the money and 5% deposits, a lot of people could walk away from 5% deposit and leave the rest of us carrying the debt.
Yeah, look, and I'm all for young people getting into the housing market. I mean, when I was trying to buy my first house, my problem was I couldn't get the deposit. I had enough cash flow to pay the mortgage off, but I was unable to save up the deposit. And you often find that's the case. But, you know, you've got costs like stamp duty, for example. I mean, they still have to find that, don't they?
Well, some people don't because of the stamp duty exemptions, but yes, they do. But, Steve, there are 100% loans out there right now. There are companies that actually, and have been for some time, offering 100%, provided you have a minimum level of income. And here's a strange one, provided you have a university degree. I don't know why that counts for buying a home, but
really?
You can get up to you get up to 100% loan today. The first part of the loan, which might be the deposit, is certainly at a slightly higher interest rate. But the reason behind that is that there are a lot of professional couples that can afford to buy a property but haven't been able to save the deposit. So they could literally go and get a 100% loan and be in a position to pay less than what they're probably paying in rent, and it gives them an equity position. That's available today.
The other thing about this, and as we said, the details are a bit slim. They're trying to suggest they won't allow all of these 10,000 top-up loans to be in Brisbane or in Sydney or in Melbourne. They're going to force them out into, regional areas. How the hell are they going to do that?
Yeah, look, again, the news is always good, and as you said, the detail is a little bit patchy. I know that they need to bolster and boost the regional areas, and they may even need to really focus on areas like Perth and Darwin because of the dramatic decline in price that those areas have had. Most of these things that they put forward, Steve, as you know, sound great, but when you get into the detail, it can become very, very messy for a lot of people.
Were you surprised that the UK-based Purple Bricks business has fallen over in Australia? I should point out they're an advertiser on this network.
Oh, look, I know, a very big advertiser. They spend a lot of money. But the reality is in the marketplace we're in now where there is more stock available than there was a couple of years ago, people are not going to pay up front, albeit they change their model to half up front and half on settlement. But you were paying up to their full fee before they would take your property for sale. And they did promote the fact that 90% of the properties they sold, the people would use them again. What they didn't say was 90% of the people that listed their property with them would sell again. And I think there are a lot of people out there right now that have personal loans that they didn't have before they listed with Purple Bricks because many of them would have to go and borrow the commission to pay it up front.
Clearance rates?
Very good. Sydney 65% plus, which is bigger than this time last year, almost 9 points bigger than this time last year. Melbourne performed well in the mid-50s again, and I think Adelaide had a good run. But it's quite interesting to see that when everybody's talking about a really tough market, that the area that we measure the entire country by, where it starts in Sydney, has been peaking in their clearance rates better than anywhere else in the country for the last few weeks. So something's happening out there, Steve.
Very interesting. The other thing that's happening, of course, and we'll talk to you next week because the election will be run and won, and we'll have a lot to talk about with real estate. Charles Tarbey from Century 21, thank you very much.
Thank you very much, Steve.
Charles, back with us next Monday.